everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a great day. Happy, what is it, Tuesday? Happy, Bitcoin drop day. Just kidding. It's pretty much expected. So congrats again to our community members for some healthy profits here to the downside. ETH short 50%, Link short 40, and Bitcoin so far 19% for those targets there. Again, those are just 5 to 10x leverage trades, but safer than sorry. Again, we do not like liquidation levels in our community. So we're going to talk a little bit about this situation here, okay? So with CRO coin dropping as it did, I forgot to mention, we took some nice healthy profits on a short from CRO as well. That was yesterday. It took us 4 hours for 30%. Again, fantastic stuff. The proof is in the pudding, though. If you saw the video from yesterday, as I explained, the price is going to drop. Obviously, the price is aligning itself with Bitcoin right now as it pulls back. I'm not saying that this coin is no longer independent of Bitcoin. I'm just saying there's a codependence to the downside, as most coins have. Okay, so again, you just got to be realistic. No matter how awesome a coin is, no matter how much you like it, never attach emotion to a coin, right? Never feel emotional about something, and you should never have your heart sink when the price drops. You should just be ready for it. Anyways, conversation for another day. So what we want to do here is talk a little bit about the Elliott Wave here. Discuss big picture and kind of work our way down. Quickly to preface, we do have a phenomenal exchange that we're working with now. Bitunix, thank you again. No KYC, no VPN. Phenomenal deposit rewards if you use my link. So really simple. We're going to have trading competitions there as well in the near future once we have enough registrations. So very cool stuff there. Thanks again for the wonderful feedback. A lot of community members are really liking it, and I like it too. So here's the thing with CRO. Let's go ahead and take a look at some big picture stuff first. We'll work our way down as per usual, and as we can kind of see here, money flow index and the RSI is coming down. Not a stark, terrible situation. Sky's not falling. It's very standard. Okay. Same thing with the MACD here. Very standard divergence on the horizon. Has it diverged yet? No. We could very well bounce at this key level support here at 86 cents. We could also bounce at 79 cents if we get to that level. We'll discuss that potential. Truth is, the price wicked all the way down to 80.5, so that was not a fantastic wick. Great for us because we were able to sweep some of that lower level liquidity for our trade, but again, just depends on what direction you're heading. If the price is coming down, you may just want to consider adding to your bag, but generally speaking, the daily time frame doesn't give us too much information right now, just based on the simple sentiment that we are well above all moving averages and there's not a lot to rely on. 4-hour time frame is a lot more telling. So we're going to focus on that and just kind of recognize to kind of foundationally understand we are pretty darn low on the RSI. Anything under 50 is bearish. Okay, so the truth here is the daily time frame looks bullish. It'll look bullish for a few more days, even if the price keeps going down. The 4-hour time frame, however, gives us a better perspective. That's why I love this time frame for swing trading, because it's kind of a transitionary time frame. So the 4-hour time frame is telling us, hey, we got the price action likely to pull back further. Money flow index wicked all the way down to 30, and last time we saw this happen, the price action was kind of performing sideways here, and it was right before the price legged up pretty significant. Okay, that's the money flow index. Talking about the RSI, RSI hasn't been this low since October 19th. It's been almost a month since we've been back under 50 on the RSI. Okay, so we got to recognize that's a very real thing. That could work as a resistance level, keeping the price action in play. It could also help us be range bound to build that volume profile, to build that foundation of volume so the price can leg up again. It's not a bad thing though. Please, please, please get that through your head. Okay, now that we got that out of the way, sorry, I get a little preachy sometimes. I mainly do that because I get a lot of members coming over to my premium group asking if I can recover their portfolio or what can I do with an upside down trade. Truth is, not like you can do sometimes. You have to cut your losses and move on. Sometimes that's just the bullet you have to bite. All right, so Elliott Wave, let's talk about this here. If this is the bottom, which we don't know for sure it is, but likely based on volume it seems sensible, then the price action should increase from here to bounce off of one of these 3 fib levels. In other words, 0.382, 0.5, 0.6, and 8. Those are really common retracement zones. So we could see 9.6, 10.1, or 10.6 as potential resistance levels. Okay, now with the 50-day SMA hanging out right here at 0.236, we may not even get the price to come up to that level. Okay, so just know that's not a guarantee, but a statistical probability the price will come up and down again to fulfill our A, B, C pattern. Okay, 2 lower lows and a lower high to finish out the pattern here. So keep in mind that's kind of where we're at there. We're on the tail swing, and that's not a fantastic place to be, but we have just more likelihood of the price continuing lower, even though we are fully overextended on a lot of different scenarios here. We're still likely to go down. Okay? Again, a lot of this is based on my bias of Bitcoin going down and analyzing those charts too, and just recognizing that Bitcoin doesn't seem like it's going to recover much. If it does, it should be just a dead cat bounce and the price pull back again. So there's that. We also kind of take a quick look here at the hourly and just kind of wrap it up here for us. I know it's been a little bit long-winded, apologize. Taking a look at the Ichimoku cloud, we can see that this window is closing here for a short position. So in truth, we don't necessarily have full-on confirmation to want to leave a short position open. Definitely don't have confirmation to take a long, I'll tell you that much. We're well below the cloud, look how big this guy is. No reason to concern ourselves. So if 24 hours later, the price is sideways and we're right here, and the cloud is kind of like really close to us, that might be a consideration to take a long. The reason why this indicator is helpful is because it forces you to be patient. Because right now, I got a lot of folks asking if they buy the dip. My recommendation would be no, we want to buy this dip if it happens, because then we know that the price action is less likely to break to the downside because we're no longer making or establishing lower lows. The way to break a descending trend is to establish a range-bound activity, okay? The next trend reversal is to establish higher highs and higher lows, all right? So we're still early in this phase. We're not going to break bullish by no means, and if we do, it's going to be completely unrealistic and probably won't even hold. If the price shoots up tomorrow, be very careful. That's probably a trap. Anyways, okay, so that's kind of what we got there. I'm going to send out my playout chart here on Twitter, Telegram, and Discord. Links down below for that. Again, make sure you check out our wonderful, fantastic exchange. No KYC, no VPN. And obviously, you want to be part of our premium group. Jump on over there and get to know our traders better. We got awesome situations there. Fantastic trades today, too. We took, nice 50, 40, and 20% on Binance. Bitcoin, Link, and Ethereum. Again, congrats to our community members there. Thanks again. Hope you have a good rest of your day. We'll see you in the next one. Take care.